Hi, everybody. This is Aga from CoinTracking, and I'm here today with Richard, our awesome CPA from Ireland. And I think he's got some news for us. There's some sort of deadline coming up or something, right?
That's it. There's just something I want to touch on now, considering the time of year it is. So, there's three things I want to talk about in this quick video. The first is the pay and file deadline for capital gains tax in Ireland.
Right.
Secondly, it's the harvesting of capital losses. And then thirdly, very quickly, on something called the 4-week rule or the bed and breakfast rule.
Let's
But
go
they're
then.
the three quick points I want to talk about. The first one, considering that we're going to talk about 2022 kind of real time now. So it's the 25th of November. So there's still a few weeks left. But basically, the pay and file deadline in Ireland means, as it sounds, you pay first, you file after. So with that in mind, the first payment date is fast approaching. It's the 15th of December. Okay. So there's still a few weeks left, but it's something that people should be very conscious of. So basically any gains made from the 1st of January 22 to the 30th of November 22 needs to be paid by the 15th of December 2022. Any gains made on the 1st of December 22 to the 31st of December 22, the the tax needs to be paid by the 31st of January 2023. Okay, so we then file much later. We file by the 31st of October 2023 for both periods. It's it's an unusual way of doing it, but it sort of means that people should be thinking about using tax mapping software like CoinTracking and everything now to get their affairs in order, because uh, these payment dates really can affect things like losses.
Exactly.
Is that clear? Does it make sense?
I
Yeah.
think so, yeah. I mean,
Yeah.
just check it now and make sure you're up to date with everything and you
Yeah, because it
see.
can show unreal. Yeah, exactly. Like if you go online and you can look, you can see unrealized losses. For example, you need to crystallize those losses by selling them. If you sell them, uh, you therefore they've been realized, and you can use them to offset against any gains. I'll jump now into to capital losses and harvesting of losses, and just good techniques you can use.
Mhm.
The thing to know to be very aware of, especially in 2022, is um, it hasn't been an easy year for crypto. Okay, and there's
No, it
coins that
has
people might
not.
have. No, it hasn't. And there's coins that people have that they may want to hold, but they feel they haven't been performing well.
Yeah.
Um, you, even though they may be at a loss when you bought them. They haven't. The loss has not been realized until you sell them. You have to sell them to crystallize the loss. The benefit of crystallizing a loss means you can offset that against any other capital gains. Any other capital gains, not just crypto. You can use to offset against if you sell a house, for example, or other shares, or pretty much any other thing that falls under the CGT remit. A capital loss incurred in cryptocurrency can be used to offset against that gain.
So it's sort of kind of making the best of the loss, even though
Yeah,
it is a loss. At least you can do something
at least you can do
to
something with
use
it, and
it.
that's kind of harvesting losses. Being realizing the losses to use against actual real gains as well. So you mitigate the amount of tax you pay, and which that's what everybody really wants, isn't it? To reduce their tax bill.
Sure.
So these crypto losses in 2022 are certainly something that should be quantified now. Is the way I do it. So um,
And you can find those quite easily with the. We have a special report on coin tracking that deals specifically with a gain and loss, where you can easily find the coins that you can
easily,
sell.
yeah, it's brilliant. Exactly, it's a really good system because you can see unrealized losses, unrealized gain, and you go, right. If I sell this right now,
Mm.
I will realize this loss, and I can use it against my tax return. It's an excellent system. I certainly think yeah, having a look now back at your account is a wise move. The some slight confusion that people have regarding the Irish approach to CGT being the two payment dates of January to November, paying by 15th of December, and then December paying by 31st of January. They're payment dates. Um, the year of assessment is still the year of assessment. The reason that that's important is because capital losses cannot be carried back. They can only be carried forward. They can be carried forward indefinitely. That means basically, if you have a capital loss in 2022, but you have no gains to offset that against, you can carry that capital loss forward into future periods. So if you have a gain in 2023, 24, 25, 26, that capital loss from 22 can be utilized against those future gains.
That is useful.
It is useful, but the thing to also notice, they cannot be carried back.
Mm-hmm.
And that is just why I wanted to highlight the January to November period and the December period. The year of assessment is 2022. So in this scenario, some people might have it where um, they have a gain in January to November, a capital gain in January to November, but they have a loss in December. Now that loss came after the loss was in
Right.
December, the gain was in January to November. In that instance, the year of assessment is taken as a whole, and it's considered one period. So
Mm-hmm.
the loss in December can be used against the gain in January to November. So that's just
Mm-hmm.
something to be for people to be clear of and aware of. Um, yeah, I mean, if you look at your coin tracking account now, you should be able to see the state of affairs. Okay, and really, there are people who hold tokens, I know, and they find them very dear to their heart, and they don't want to sell them right now. They may not be performing as they'd like presently. In the future, they may believe that they'll improve, so they want to hold on to them.
Mm-hmm.
That's when the third point I want to talk about comes into effect here. This in Ireland, something called the 4-week rule, or the bed and breakfast rule. In the USA, it's called the wash rule.
Right.
I won't get too deeply into it because it can be quite complicated. But it's Section 581 of the Tax and Consolidation Act in Ireland, and that section of the Act applies to shares and securities. Okay.
Mm-hmm.
So I suppose when the 4-week rule, basically means if you sell an asset at a loss, and you reacquire that asset within 4 weeks of selling it, that loss is ring fenced and cannot be used to offset against any other gains. So say you bought an Apple share for $100. Okay.
Mm-hmm.
You then sell that Apple share today for $80. If you buy back that share at $80 within the next 4 weeks, that loss of $20 cannot be used to offset against any other gains. Okay. And the reason that that's important is Section 581 applies to shares and securities. Now,
Does crypto
does
fall into that
it does
category?
into that category? That's exactly the question. I will leave that up to the users to decide. Certainly something I'd like to talk about further. But the SEC in America have come out and said that Bitcoin, for example, is not a security. That Bitcoin is a commodity. Okay,
Ah,
so if you
so
were
they
to
do have
use
that
that,
cleared out.
yeah. So that's in the USA. So if you were to apply that line of thinking, the 4-week rule would not apply to something like Bitcoin, and you could sell your Bitcoin on the 30th of November, say. If you bought it at you bought it at $20,000 and you sell it at $15,000,
Mm-hmm.
you could sell it and buy it back immediately, and that $5,000 loss could be used to offset against other gains, if you deem Bitcoin to
Exactly.
be a commodity. So the harvesting losses at this time of the year is a really important thing for people to consider, and that's why I wanted to have this quick video
Mm.
about it. Um,
At least we are aware of that fact, and we can, decide for ourselves and talk with our tax advisor and decide what
yeah,
we want to do. Right.
and as you mentioned, the coin tracking is brilliant for that because you can see the state of affairs as at today. If you were to sell, what kind of loss would be realized, and also what kind of gain. So, tax mapping software like coin tracking is invaluable at this time of year and always.
All right, guys. I think that's all we have for you today.
Yeah, I'll give you one. Sorry, do you want to hear one?
Okay.
Well, not yeah. Just in terms of filing, if you have a loss this year and you're wondering should you file a capital gains tax return uh, next year or
Mm-hmm.
going forward, even though you only have a loss, my advice would be it's not legally required, but it's best practice to do so. The reason why is that um, you've proven to the Irish Revenue that there has a loss. You put it down in a legal document that a loss has been incurred. You won't forget that loss, and um, it's very easy. It's just good practice to recognize a loss on an Irish revenue document, and that way, if anyone ever queries it, they can look back and see a very clear continuity path. That,
Mm, it's
you
a
know.
very good point. Yeah.
Anyway, that's all I wanted to say. That's it.
Okay. Thanks, Richard, for doing this as always.
No problem.
The more we know, the more we can do. And so,
Exactly.
guys, let's just get counting. And even if we've got a loss, at least we can utilize it somehow. So
Utilize it. Yeah, it's
get
important to me.
harvesting, people.
Mhm.
And we'll talk to you soon. Bye bye.